Today, I want to talk to you guys about the big pillars of credit. The big pillars of credit, things that are super important. So many times it happens where I'm talking to someone, working with someone to get a home loan, and bam, we smack right up against a credit problem and we have to stop the process. Here are approximately 10 things, maybe a little bit less, a bit more, on how to fix your credit. So let's get right into it. Roll the footage. All right. So, number one, big pillars of credit, never miss payments. Your biggest hurdle here is that missing payments, 30 days or more showing up on your credit report, those things are approximately, being on time payments and missing payments is approximately 30% of your score. It's massive. This is a big red flag for lenders when you're trying to get a home loan. If you start missing payments, it can really hinder you. So we want to work on fixing those if they're already there, okay? And there's ways to do that. There's ways to remove those and stuff. I won't go into that in this video, but being on time is extremely important. So don't miss payments. If you do, number two, catch up on your payments. If you're behind and so forth, do the very best you can. Call the creditor, see if you can work something out so that they're not continually dinging your credit. This is not only important in terms of getting approved for a home loan, but also your pricing of your loan, because loans are based upon risk. And the higher your credit score goes, typically, the less risk you are. So that means that a lender will say, okay, great. So we'll give you a better rate. We'll give you better loan pricing, right? Very, very important here if you're looking to get pre-approved or looking to get better loan pricing for a loan. Number three, pay down your debt. This is something called utilization, or your debt to credit ratio. This is also approximately 30% of your credit score. So if you have high utilization on things like credit cards, okay, this is probably going to be impacting your credit score, and it's fixable. It's controllable. All we have to do is make a plan, start paying down your debts as quickly as you can. Typically, you want to pay down those debts and those open trade lines to below 30% of their utilization, preferably below 10%, but definitely if you can, below 30%. One of the ways to potentially do this is to use what Dave Ramsey calls the Dave Ramsey snowball method, right? So what you do is you take whatever savings you possibly have each month, even if it's a small amount, pay down your smallest credit card first, okay, or smallest debt, then use that next one to pay the next one down. So now you've paid off one of the accounts. That means that you don't have to make that payment anymore. Use that money to pay down the next smallest or next larger account, and so forth and so on, until you have most or all of those debts paid down to below 30% of utilization. Okay. Big stuff here. Next one, limit your credit pulls. Approximately 15% of your score is how many inquiries you have. This isn't necessarily the case for a soft pull credit. So if you and I are working together and I'm working to help you fix your credit or to get a loan, I can do a soft pull and it doesn't impact your score, but the hard pulls can. And this is including if you're trying to get, let's say, a car loan or a credit card or something like that. So you don't want to have too many inquiries within a 120-day period, because if you do, that can bring down your score. So limit the amount of times that companies pull your credit and do a hard pull. That can help you to improve score over time. And of course, at the very least, prevent your score from going down. Next, use Experian Boost. Experian Boost is a free service from Experian. It's simply what it does is it adds things to your credit report that are not typically added. So it may put things on your credit such as your rent payments. It might put on there your cell phone bill or your utility bills. Okay. This can then help you to improve the score. If your score is, right now, let's say it's right below where you would like it to be for a pre-approval. Many of my clients have used Experian Boost to get their score up by, let's say, 30 to 50 points in a relatively short amount of time. And then the next thing you know, now we're pre-approved for the loan. Okay. Next one, use TransUnion, the what if simulator. TransUnion has a simulator that will allow you to see what your score might be if you were to make certain changes on your credit report. Super valuable because you can kind of see a picture of the future. So they sometimes call this the what if simulator, or the score simulator. I don't believe that this one is free, but I think it's pretty cheap to use. There's also an app called Wallet Hub that's super good. It's also, I believe, backed by TransUnion, and I think it's a competitor to another good one, which is Credit Karma. Those ones sort of go hand in hand, but you can use these in conjunction with that what if simulator, or the score simulator, to see what changes you could make and find yourself a pathway to like the fastest way to getting your score higher. Okay. Next, I think this is number 7 or number 6, remove disputes. Most mortgage lenders will not want you to have disputed accounts on your credit report. Because if you have disputed accounts on your credit report, that usually means that the score that's showing, okay, will be an inaccurate score. So what does that mean for you? It means, hey, we got to remove those disputes so we can actually see what the real score is. Then once those disputes are removed, then we can take action steps after that to fix the score and remedy the situation. So make sure you call if you have disputes on your credit report. Call each of those bureaus, okay, and get them to remove it, and also potentially have them put something in writing. You might also, with that, ask them when they report to, or when they refresh their reports, rather. So that way you can know when to expect those changes to take place. With many of the bureaus, it's going to be at the end of the month, but sometimes they change those things. All right, next, open a secured credit card. If you don't have any credit at all, this is a good idea. You can go down to your local bank, say, or a credit institution, maybe a credit union, or even online. There are online-only banks and digital banks that you can use. But using a secure credit card can help you to establish credit if you don't have it, or perhaps to re-establish credit. Let's say you went through like a debt settlement program or a bankruptcy or something that harmed your credit for a long time. Getting a secured credit card can be something that will help you get back on your free credit wise and then continue to move forward from there. Those are super good. I think we have a couple more. Number 9, don't touch super old accounts. This is especially the case with medical bills. In many cases, medical bills are not that important when we're looking at doing home loans, okay? But in other cases, if you have old collections accounts that are, let's say, older than 2 or 3 years old on your credit, it may not be the case that you have to even mess with those at all. Okay. Now you may want to call me first so I can take a look and see, but it's important to know that sometimes, like rehashing or bringing up those old things from the past on your credit, so to speak, those things can actually bring your score down versus bring them up, right? So I would say, number 9, don't touch those accounts until you talk to me or a mortgage lender that you trust to ask a professional opinion about whether you should pay those off, negotiate them, or something else. Number 10, don't have too many credit lines. This is especially the case with things like not just credit cards, but store cards or payday loans, or this would be specifically payday loans that show up on your credit, or also personal loans on your credit. When lenders see that you have a whole bunch of credit lines that have been opened, and specifically if you've opened them in a short period of time, let's say in the last year, that can be a red flag. right? Because it shows that you are potentially using credit irresponsibly. I usually like to tell my clients it's a good idea to maybe have 4 credit cards, maybe 6, but usually 4 at the most. I'd say roughly speaking. Any more than that, it tends to be pushing it because lenders can start to look a little bit iffy at those things, especially underwriters and stuff. And if those cards are starting to get maxed out, that can be an issue. Or if there's these unsecured, high risk or high interest loans, lenders may wonder what's going on there. So try to limit the amount of credit lines that you have and maybe use those credit lines, right, to improve your credit. And this will be potentially a number 11 bonus is every 6 months to a year or so, call up those credit lines, specifically credit cards, okay, ones that you plan on keeping for a long time, right? Call them and ask them for a credit line increase. Because once you can show that those institutions are willing to lend you more and more money, that decreases your utilization, your debt to credit ratio. And that also shows that they trust you and you're using credit responsibly. So they're willing to give you more credit. Okay. That can increase your score. I'm Aaron Lietz with Logical Loan. Keep your home loans logical and call me if you guys need help. All my information is in the description box below. We'll see you in the next one.